What is up guys, Taiki here. Welcome to the market update for April 25th. Today I'll be discussing USN and the broader bull case for algo stablecoins such as UST, USN, and USDD from Tron. So if you like the content, please like and subscribe and leave a comment in the comment section below. So let's first discuss USN because I feel like it's top of mind for everyone right now. So this article from The Block got posted around like 7 a.m. this morning, and people were up in arms. There were like so much panic, so much FUD because the original piece, right, the original article before they edited it said that it's going to pay 10% yield from the near staking rewards, and everyone was like, oh my god, we got rugged, right? What a failed launch. And I not gonna lie, like before they edited this article, I was like, all right, this is fine. Like, hopefully this is fine. Please, my bags. But what ended up happening was, the USN, the central bank, which is like the issuer for USN, they mentioned that they're gonna subsidize yields right through Burrow, Origami, Bastion, and the people in the first couple of months they're gonna receive 20% plus APY. Okay, so 11% is gonna come from the near staking APY, and the additional 9+% is gonna be subsidized through proximity labs, their grants and whatnot, right? And it says you can lend out your USN on these money markets. So it sounds like you can take USN, right? Put it into a money market, and they're gonna just airdrop you USN yields twice a day. I think that's what I read. But also if you can lend it out, then you can also like earn lending fees, right? This also opens up a vector for people to borrow USN and sell it in the open market to effectively short it, right? I know a bunch of people like to do that with like UST and USDT as well, but I'll give my reasons why I don't think that's a huge thing. I don't think USN is going to depeg because, as speculated in this white paper, I don't really expect any of you to read this, but I read it, so you don't have to. I'll link this in the description below. I'll just go over like the main points, and where is it? I think I highlighted it. Oh yeah, right here. So I think they did some Monte Carlo simulations on, I guess, what's like the worst case scenario. How can USN potentially lose peg? How can we ensure that that doesn't happen? And they mentioned that, okay, I think the best way to do it is to, in the bootstrapping phase, let's back it partially with centralized stablecoins like Tether, and also with Near, right? So it's backed by dollars in the bank account and Near, and whatever this research is, they meant it concluded that the recommended initial stablecoin part of the reserve fund should be at $1 billion. So whenever this thing launches, or I guess it launched, but when this thing officially launches, right after the yields are actually made available, because that's what really matters, it's gonna be backed by $1 billion with a Tether. Where's that coming from? I don't know. They did raise like over $500 million in the past couple of months from VCs, so I'm sure part of that's going through. I'm sure other VCs are gonna like pile into this to help seed liquidity, or maybe they're gonna wait for market participants like you and I to just dump a bunch of Tether into this. But either way, right? It sounds like they're gonna get to $1 billion backing with USDT, and also where is it? Right here, USN rate stability and backing principles. The reserve fund for USN is gonna be double collateralized 2-to-1. 50% near and 50% with other stablecoins. So with the $1 billion recommendation and this 2-to-1 backing, it sounds like USN is going to launch at roughly $1 billion market cap, right, at inception, backed by $1 billion with a near and $1 billion with the USDT. I don't know this. I'm just speculating based on this white paper. Sometimes reading white papers can actually be helpful. I recommend people do that. It's sometimes really nice. So there's that. So I don't really think that USN is going to lose peg, right? Because $1 billion with the USN is literally backed by Tether and some Near. I think over time it's going to change, right? I think it's only going to be backed by a bunch of Tether at the beginning, but as USN grows, let's say it goes like $5 billion in market cap. I'm sure at that point it's going to be like $2 billion backed by USDT, $3 billion backed by Near. To be honest, I have no idea, right? Let's just see what happens. The important point is USN 20%. It's not going to lose its peg. It's going to be considered safe by the markets, and I'm definitely going to put some stables into USN because why not? 20% is pretty nice. And before I go over, I guess like the bull case for AlgoStables in general and how I think about the markets, and the bear case for, I guess, like the bear case for DeFi, and also like the bull case for these AlgoStables in general. Let's first discuss this article written by His Excellency Justin Sun about USDD, Algo stablecoin launching May 5th. I mean, this article was kind of a meme, right? It's gonna set a basic risk-free interest rate to 30%. I don't really know where this is coming from. I guess we'll hear from him later. I'll probably, to be honest, I'll probably like allocate some capital into USDD. Yeah, I'm not going to touch TRX, the token, but 30% is like pretty attractive. But the roadmap, the roadmap is where you should have your attention. It's going to have 4 stages: space, ISS, Moon, Mars, echoing both mankind's and Tron's efforts in future space exploration. Ooh, maybe he's going to work with Elon and make USDD the future currency of Mars or something. And he is also going to back this with $10 billion worth of highly liquid assets raised from titans of the blockchain industry. So he's basically copying Do Kwon, right? Except he's upping the stablecoin yields to 30%. I guess Justin Sun doesn't like that. There's another rich billionaire that's buying a bunch of Bitcoin. Whatever works, right? Whatever works. How can you fade this man though, right? His Excellency Justin Sun, he's a crypto diplomat, crypto space pioneer. If he's offering me 30%, if a rich billionaire is offering you 30% stablecoin yields, my gut instinct is just take it, right? Just take it for as long as I could. All right. That being said, not financial advice. I should have said that earlier, but none of this is financial advice. AlgoStable coins can go to 0. If USD goes to 0, then we're probably going to wake up to like minus 20% daily markets. But all right, let's give my bull case on AlgoStables, why I think it's still underrated by the broader market. And I'll give more practical examples, right? I'm not going to just say like, 20% yield, so super sexy. But I'll actually give like actual, like tangible examples on why the market is proving, this bull case to be true, at least how I perceive the markets. And I had this light bulb moment when a friend asked me this question: what's the stickiest non-ETH L1 application? And this person is very, very smart, right? He knows what he's talking about. This was more of a rhetorical question. And, there was some discussion in the group. There was like, maybe it's Trader Joe, right? I mean, it's over $1 billion TVL, right? I mean, they're innovating on the product front. TVL is sticky. Maybe it's Astroport, right? I mean, this TVL is like literally going up into the right. I took these screenshots like 2 weeks ago, so it's a little outdated, but I'm sure it's going up, right? But, by far, my answer was not Trader Joe or Astroport. It was Anchor, right? Because look at this. I mean, back like 12 months ago, I mean, this thing was like, I don't even know, there was like $100 million into Anchor, right? This is like a linear, this is like a weird chart, right? The aspect ratio is kind of weird, so you can't really see the actual growth, but this used to be like a few $100 million, right? Back in May, June, July. And now it's at $12 billion in deposits. It's probably higher. And, USD, it's $18 billion market cap now. And I would not be surprised if USD hits top 10 in market cap in all of crypto, right? I mean, would you be surprised? I don't think so. I also know like B Luna, right? Bonded Luna is like top 25. So, imagine like when all these Luna assets or Terra assets keep going up in market cap, that'd be pretty wild. But UST Anchor. I mean, this is like me personally speaking, but I feel like every time I put funds into Anchor, like I don't really have an incentive to take it out, right? It's like 19.47%. Thank you very much. Thank you, Terraform Labs. I'll take it, and please don't let it lose peg. Right? That's kind of the mentality. And the person that asked the question, right, was like, yeah, I think you're right. And this is a cynical way to comment on this. And he has a broader point that he wants to get across, but he basically said, yeah, you're right. It's Anchor. So basically a stablecoin yield Ponzi. How innovative is that? And when I heard this, I was like, that's an interesting way to put it. And I had this light bulb moment where I'm like, yeah, so the Stickiest application, and I guess the innovation here is that, there's a bunch of mercenary capital in crypto, right? A bunch of people like farm somewhere and they leave, and it's really hard for applications to like maintain liquidity. But Anchor, like no one leaves Anchor, right? And if you're like a UST non-believer, then yeah, like you don't touch Anchor. But that's fine. Like the market will keep going on without you. But people will just keep going into USD, and it's kind of weird, right? Because DeFi is supposed to be like it's supposed to bank the unbanked, right? We're supposed to go bankless, but in terms of like innovation, like in terms of like investment opportunities, what's out there? Like not much, right? Like literally the stickiest innovative thing in all the crypto that's not on ETH is Anchor, right? And his point was that nothing is sticky enough in the current environment. Nothing is innovative enough. Nothing has a strong enough value proposition for people to stay in there for a really long amount of time outside of Anchor, right? It's predominantly mercenary capital, just entering, leaving, and I guess like rotating profits into Anchor, right? This is the point he wanted to get across, and he kind of mentioned that there really isn't that much innovation going on in DeFi. I mean, there is innovation going on in DeFi, but in terms of the investable opportunities, it's not really there, right? And sure, Aave is innovative, but there's like barely any switching costs from Aave to Compound, from Aave to another trusted money market. I mean, I guess there is, right? I would trust my net worth with Aave, whereas I wouldn't with like some random Aave fork. But broadly speaking, it's really hard for new protocols to pop up, gain a bunch of TVL, but 4 months from now, like their TVL is like dwindled like minus 80% or something. Of course, I mentioned non-ETH applications, right? Like ETH01 applications like Curve, MakerDAO, Convex, Lido, Aave, Unit. I mean, these are all really, really sticky, right? And most innovation happens on Ethereum. A bunch of projects like fork these projects and try to add different layers to it, and that's kind of like innovation, right? But I feel like it's fine, right? Because I would rather like a new team like fork Aave and add features to it rather than trying to create like this new money market from scratch, right? It's just it's a lot easier to believe in something if it's like forked from Aave, but it is what it is, and hopefully that changes over time. But in the current market environment, it is what it is. It's the current state of DeFi. There's always ways to extract value, but DeFi tokens just tend to just dump, right? This is like the example, like Aave ETH, it just dumps, and I feel like the incentive structures with DeFi tokens, it's kind of flawed. And I'm not saying this is bad, or I mean, I guess I am saying it's bad, but it's just like more, it is what it is. Because for teams, for really, really strong teams to work on a project from zero, like they have to be incentivized to do it, right? Because if a dev team is strong enough to create like some crazy innovative application, then those people are probably smart enough to make a bunch of money like investing in the crypto markets. So for people to not want to do that, right, and do their own thing, they really have to have different types of incentives. I'm not going to mention which project this is because that's not really the point, but I consider this project to be really innovative. I think they're doing interesting things. However, if you look at the tokenomics, it's just going to the team, investors, and I can see this project like locking in like $10 billion in TVL maybe 12 months from now, but I don't think the token is going to be that great of an investment. Not financial advice. I mean, you don't know what the token is, so it doesn't really matter. But it might look up something like this, right? It might have a hype cycle, and it might just like dump perpetually to zero. Right now, right? The markets are treacherous. The only thing attractive is like anchor rates. So in this type of environment, when there's a lack of new capital flowing into the space, the stickiest thing right now isn't volatile DeFi coins. It's Algo stablecoin yield Ponzi's. Anchor. And let's wrap this. Let's bring this back, right? Fish, right? Let's reel it back in. So Near combines the L1 thesis. So my L1 thesis has been, I've been talking about it for like the past 12 months, but I think there's always demand for block space. Whenever a new chain comes in, right, or a new chain launches with incentives, people get hyped for it. Like people go into it, and then at some point, like the transaction costs get way too high, and then at some point later, a few months later, a new L1. It's like the same cycle over and over again. None of these L1s are that like innovative, right? At least on the EVM front. But there's always demand for block space. So Near combines that, right? Demand for block space, as well as the mimicry of the stickiest non-ETH application in crypto, which is stablecoin 20% yields, subsidized with a trusted peg. I'm speculating that the USN peg is going to be trusted, but from the white paper, I feel like it's going to be safe, right? Because it's going to be over collateralized. I feel like USN launching, while the anchor rates are going to go down, I feel like it's pretty good timing, right? The thing is, like, I don't think people are going to leave Anchor for USN. For example, like, I have money on Anchor, right? USD. Like, I'm not going to like leave, right? Like pay slippage to bridge, like swap all that just for an incremental 2%, right? 20%. I'm not going to do that, right? So I feel like there are switching costs from Anchor to USN, even though a lot of mid-curve takes are going to be like, oh, people are going to leave US. No, there's actual switching costs. I think the problem with USD, but the potential risk is that, let's say I have like, you know, a bunch of money on Phantom, right? Stablecoins. I'm like, all right, I want to earn some yield. You know, like maybe 2 months ago, I would have taken it all into Anchor, but now I have an alternative. I can put it into USN, earn 20%. That definitely beats 18%. Oh, and it's over collateralized. Cool, I'll take it, right? So I feel like the incremental demand for USD might go down a little bit, but I don't think demand is gonna, or I don't think like, you know, people are gonna sell a bunch of USD because of this. And you can kind of see this in markets. You know, USD up 18 billion on market cap, Luna outperforming everything. I mean, I guess I sold at wrong timing, but it is what it is. You know, Luna and USD always proves the market wrong. You know, it's the strongest asset in all of crypto, and I don't know. I'm not gonna bet against it. My base case, right? You know, I mentioned that, you know, it's probably gonna launch like $1 billion market cap, right? Once all the dust is settled. I think it's gonna get to a few $1 billion. I think people are gonna get angry. You know, people from the UST camp, some of them might get angry. People from like the anti-algo stablecoin camp, right? They're gonna get really angry. It's like, oh, it's not even decentralized. Oh, USDT, you know, it's gonna go. I mean, who cares, right? Like the market will move on without you. So you know, I think USN is gonna go up in market cap. I think USDD, right? Tron's stablecoin will do well too, right? It's like I'm not really a fan of Tron, right? Like I mean, like what is there to do on Tron, right? But 30%, right? I'll take it, right? I'm not gonna allocate my entire net worth into USDD, but maybe like, you know, a quarter of my stable stack, I'll just put it in there, right? I think it'll be fine. And I'm pretty confident, or I've been confident that it's going to get to a multi-billion-dollar market cap because Neutrino USD, USDN with waves, right? It got to $1 billion market cap. I think right now it's like 970, like 900 million or something, right? For an algo stablecoin that's less capitalized, less backed to hit $1 billion market cap, I mean, how can USN not beat this, right? I'm not saying it's going to do this in like the first day. Give it like a few weeks or a few months. To be honest, I don't really know. The decentral bank DAO, like they're going to vote to like figure out like the distribution of USN, and I don't really know how long that's going to take, right? They're probably going to have a proposal. People are going to vote on it for 3 days, and then, you know, they're going to launch it like a day after. And so like who knows, right? And, you know, UST has like supply limitations. I think UST can only grow like $200 million a day or something. Maybe it's a little lower. So I'm sure USN is going to similarly have like supply growth then caps. So I don't really know how long it's going to take, but, you know, USN 20%, I mean, that's pretty attractive to me. And I get this question a lot. Aren't you afraid it's going to be sold in news? I guess it was sold in news today, right? But I also think that, you know, the majority of the selling is because, you know, people saw 10% and people like just wanted to get out of it. Maybe it is actually sold in news, right? To be honest, I don't know, right? I'm just some dude on the internet, you know, investing in like internet coins and like hoping they go up. So, you know, like what the hell do I know? But to be honest, I think USN 20% is gonna be attractive, right? Like, wouldn't you say it's attractive, right? Like UST, USN, like why not just, you know, allocate some to everything, right? Who cares? I think it's gonna vampire attack TVL from other L1s because there's like really not like new money coming into crypto. You know, it's not like, you know, your neighbor is gonna like, you know, dump his net worth into USN. Like he's not gonna do that. But what I do think is gonna happen is that I think TVL will leave other L1s. So I don't really expect like crazy upside. But, you know, maybe $500 million is gonna leave Phantom. Maybe $1 billion is gonna leave AVAX. Maybe that's too much, right? Maybe, you know, $500 million is gonna leave from like, you know, a bunch of other ecosystems and flow into USN. And maybe that's the bull case for you know, near and USN going up. And, you know, if TVL goes up a lot, I think it's going to cause a reflexive narrative for near value curl and then potential narrative shift. Like I said, I don't really expect huge upside because it's already a high market cap, but I don't know. I feel like common sense just tells me that, you know, people are going to want USN 20% yields, right? And I think that's the end of the presentation. Yeah. Anyways, yeah. I mean, it's over collateralized 20%. It's like, you know, it's subsidized, right? It's similar to Anchor, right? I mean, I think it's going to be fine. If you look at the bridging data for near, it's pretty good, right? You've seen these big green dildos, right? We love to see that. If only that happens to my portfolio. You know, I guess some people are leaving because it's like 10%, but, you know, it's not actually 10%. I don't really know how long it's going to be 20%. Probably a few months, probably as long as they want it to be. But, you know, bridging data, pretty solid. you go to DeFi Llama. Let me refresh here. Where is it? Number 12. It's growing a lot. Near $500 million or 1.23 billion. It's gonna flip waves, and this doesn't take into account USN market cap, right? This is TVL without USN. So like once it launches, right, it's probably gonna be top 10, or I mean, it's gonna be top 10. It's probably gonna flip Tron, or it's probably gonna flip Matic. Tron maybe not, because the USDD thing can actually be big. But I don't really think that these algo stablecoins are like bearish each other, right? I mean, there's always like stablecoins looking for yield. So I don't think that USN launching is bearish UST, or USDD launching is bearish like USN, and I mean, maybe it makes it less bullish, right? If USN and USDD didn't exist, UST would probably be super bullish, but now it's probably just bullish. So maybe that's the difference. But yeah, I mean, expect TVL to go up. It doesn't necessarily mean that number go up, right? I mean, like markets are green, but this is down. But we'll see, right? I'm a bag holder, so I'm biased. Buy my bags, please. That's the motto, I guess. Or if you already bought the bags, then hopefully people will buy it after you. Or maybe no one buys near, but they just buy a bunch of USN, and that creates value accrual to near, right? We'll take it. Because yeah, I mean, yeah, we'll take it. So this is the narratives, right? Nothing has really changed, right? I think Convex is interesting with USN and USDT, right? I'm pretty sure those foundations are going to both buy CVX to participate in the curve wars. If you want to know more about CVX and the curve wars, look up CVX or curve on my channel. I have like an hour-long video going over that. It's definitely a learning curve, but it is what it is. I think NFTs are hot, and yeah, I had this as a light headwind, but maybe it's not. Maybe I can delete this. This can be a heavy tailwind, but that's bag holder mentality, so I'll just put it here. I don't really see a world where there's no demand for USN. Like think about it, right? Like let's say in the next 3 months, USN rates are 20%. Like do you think no one's gonna go? Like no one's gonna bridge? I don't know. If I'm wrong, then I'm wrong, right? I mean, there's no way for me to be completely right. I said near was like a Q1 play, and it's late April, and I mean, near hasn't done that bad, but it hasn't done that good either. So those are my thoughts. Hopefully they're useful. I think people just underestimate AlgoStables and AlgoStable coins. They just assume it's gonna go to zero in like 24 months or something. But who cares, right? I mean, just extract value from it in the short term, right? Just be the mercenary capital that that you want to be. And I can definitely see a scenario where if the wider markets continue to look not good, like I can see a scenario where Luna, Near, and Tron outperforms other L1s, right? Like, is that is that crazy to suggest? I don't think so, right? Like, are people gonna like it? Probably not. Is it gonna feel good that Tron is gonna pump or something? I don't know, right? I mean, but it's the free market, right? I mean, people are gonna copy each other. People are gonna go wherever makes them the most money, and the markets are gonna move the way they move. And I think our goal is to try to predict that. My prediction is USN go up. We'll see how it goes. Hopefully, it doesn't launch in late May or something, right? I don't really know how the DAO proposal things are gonna go, but hopefully it launches, or hopefully the yields are made available, hopefully this week or next week, because I'm a bag holder. But hopefully this video was useful. Let me see how long the video is. 24 minutes. If you watch through this entire thing, then damn, good job. So thank you guys for watching. Have fun farming out there. See you guys, right? See you guys. I'm gonna be in Algo stablecoin maxi for the next couple of months, probably, right? Because yeah, I mean, stablecoin yields are okay, right, on a bunch of ecosystems, but I'd rather earn yield on the principal than earning 50% on some random farm token that's gonna go to zero 2 months from now. So thank you guys for watching. Have fun farming out there. I already said that, but you know, it's been 25 minutes. My brain is fried. I'm gonna go eat some dinner. Bye bye.